Awesome. So, like I was saying, the main thing you need to be making sure you do is taking a look at your fundamentals, right? Now, I basically went over as well and said how I filter out my alert so I don't see a bunch of low impact news in this area over here, right? Basically, you go right here and you could turn it off or on, and you could choose which pairs you want, right? Now, if you're in the Bahamas, you don't need to be selecting BSD. We don't trade no Bahamian dollar pair inside the Forex market, right? So the pairs what I'm going to be looking at this week is really just USD pairs, which is like US30, Gbpjpy, gold, and maybe I may look at GBP AUD. So I have this on right here. Now, what you do is once you select your pairs, you just click apply, and then your settings, and then it will show right over here. Okay. Now I was breaking down how so I just need to minimize this bar. All right, there we go. Jesus. There we go. So we want to be paying attention to the data that is being read to you. Most people use what's that name of the thing again? Forex Factory. You don't want to be using the site, all right? I'm not saying it's a bad site. I'm not saying it's a good site. But, as I will not talk down on anything, but you do not want to be using the site to get your information, okay? You never want to be using the site. You want to be using my FX book, or you can also use investing.com. Investing.com is really good, but you do want to cross-reference most of the things. All right, right over here should be economic calendar. I'm gotta be blind. Here we go. Economic calendar. Once you click that, it's going to pop up. It's going to show you the economic calendar. And like I said, you always want to use this week. But for this reference, for this training, we're going to be using my FX book, okay? My FX book is really dope as well because they have a portfolio where you can basically, I'm not going to click it because it's going to show information, but you can basically track the progress of your accounts, okay? Now, we want to be catching a move for Gbpjpy because that's the pair we're going to look at on this call. And we want to decide what is going on. So as we can see here, we have retail sales news that was released and it was positive, but we do want to take a look at and see what else happened, okay? We also have industrial production. Was this a surprise or was it not? It was a surprise because as we can see, the consensus was a 2.6 negative, but it came out and ended up being a 4.6. This is, as you see right here, worse than expected. So this moved Gbpjpy a little bit because this was not expected. And this moved Gbpjpy negatively. So we probably would have seen, what time was this? 1930, 1850. So we probably would have seen earlier, Gbpjpy probably did a little bullish movement, okay? Just a little bit, maybe. I'm on a 50. I need to go to the hour. So you can see I've not traded Gbpjpy since that day. So yeah, I don't remember 19, 13, 14, 15, 16, 17, 18, 19, which is 7. All right, so it did a little reaction to it. But what you do want to remember is, if it's not high impact, it's most likely probably not moving the market as much. But we do want to take a look at for tomorrow to know, okay, how will we hold our trades? So we have nothing really exciting for tomorrow. I could break this down more, but I'm not going to. Keep the call really basic today. But you do want to pay attention to the economic calendar. Do not avoid this information, okay? Now, next thing is you do want to pay attention to headline news. Do not forget that headline news is number one when it comes to fundamental, because this is what you're going to be looking at more than staring at an economic calendar all day, because that doesn't change. Headline news sites like forexlive.com, Bloomberg, you have Financial Times. I paid for this once, but to be honest, I didn't really need it because I have other news sources. But, oh, my bad, it's ft.com. Well, this is another news site. You also have investing.com as well. That's another headline site. You have CNN, all these other different things. But as you begin to look at fundamentals more, to be honest, you're going to know for the pairs that you're trading, what to pay attention to and what not to pay attention to, right? Because this is what's super important, because tons of information is being released daily. Tons of people looking for stories, drive traffic to their news source. And remember as well, big hedge funds owns all of these news sites, right? BlackRock owns tons of, a lot of people think that I talk a lot of ass. BlackRock companies. News, let me just put news companies. They control what they want you to see, because if they control what you see on the news, they control your market, the market sentiment. They control what people think, right? Shapes your news. Okay, hold on. This might be it. Here you go. Together. Come on. Let's go back. Okay, so we're just going to look at it from there. Together, BlackRock and Vanguard, which is another private equity fund, owns 18% in Fox News, 16% in CBS, which is a big percentage, remember. 13% in Commerce, which owns NBC, which is also a news, MSNBC, CNBC, and the Sky Media Group, 12% of CNN, 12% of Disney. Like, companies own what you're seeing, family. So it's very important. And to be a part of a group that, dissects this information for you, so you're not misled, because they can manipulate the market with these tactics and strategies, okay? So that's super important to remember. Then you also have tons of other hedge funds that have different shares in these different things, and it's like they come together with the market makers to, control the market. But we're not going to dive too much into that today. That's for our advanced group. But just wanted to show you all how you need to be paying attention to headline news. But let's say right here, Bank of Japan nominee Yoshida sees no pressing need to revise the government. And then things like this, anything the central bank says is super important, okay? Central banks is super important for the currency. Central banks print money, okay? So information like this, you would be reading to basically get an understanding of what it is, especially if you're swing trading, you want to get an understanding of what's going on. And to give you all an idea, remember the government borrows money from the bank, borrows money from the Federal Reserve. Like, for example, most of you gets a loan for college, right? And the bank gives you $60,000. That $60,000 was never there. That came out of thin air, right? So the bank printed this money and it's now debt created, okay? So all these things are super important to keep in mind when you're looking at the central bank. When Biden is printing more money, where is this money coming from, right? It's being created out of thin air. More debt is being created. So all these things are super important. But let's now dive into the price action and the technical part, okay? So I'm going to clean off my chart. Start this over. Let's take a look in the chat. If anyone has any questions in regards to anything, just drop a question real quick. I'm going to continue. I see no questions in like 5 seconds. I'm just going to continue. All right, bet. Everyone here is millionaires and understand everything. I love it. So we're going to be taking a look at Gbpjpy. I always recommend, no matter what kind of trader you are, you want to be doing a top-down analysis, okay? Now, a top-down analysis doesn't mean you mark up a million things on every time frame. I look at some people chart and, there's no right or wrong way to market your chart as long as you understand it. But if we're keeping it 100%, clutter never helps anyone. Like, I've seen some people that said, oh, all these lines help me understand, but you're not making money. How's it helping you understand if you're not making money trading? You feel me? So it's like all these things are unimportant and irrelevant in your life. My bad. almost got into a different topic, irrelevant when it comes to trading. And you don't need this on your chart, okay? You don't need all this nonsense on your chart. And this is why you want to be practicing, looking at the chart every day, looking at patterns, whatever your strategy is. You want to be practicing identifying these things, so you don't need to be marking up every single line, every single support, and every single resistance you see. I'm telling you, is not important. But on Gbpjpy, so let's just dive straight into the monthly. How I normally like to do my charts, to be honest, and I'm not going to do it on this call because it'll be a bit more complicated. Don't want to answer any questions in regards to it. Is I would split my screen, right? So sometimes I do 4. Most times I do 2, but like 4, you could come right here and you could split the screen, and then you could break down it on each time frame. Okay, so right now it is not there, but the only thing you would have to do is just click the screen. You come over here, you hit Gbpjpy, and now it changes to, yeah, I think my computer is lagging. It changes to Gbpjpy. Okay, there we go. And then you could change the time frame you wanted to show for this, right? So you could have daily, daily, 12-hour, 4-hour, 15 minutes. If you have multiple monitors, you could break it up as well too. It's really sexy, and you can really watch it now if you're trading one pair. But I'm not going to do it for this call, because that'll be me going really deep, and that's not what this call is for. But what I do like to do is I like to have my tools as favorites here, so I don't need to come over here. And then I open up my screen in full screen. And now we're ready to boogie, my boy. There we go. Perfect. So first thing you want to do when you're doing a top-down analysis is you want to get an idea of where the market is going. Now, looking at Gbpjpy fundamental news, you're got an understanding that it was a little bearish, but that was just a short term, as we did not dissect everything that happened, okay? So we're going to ignore that 30% that we saw and just said that was 5% what we were paying attention to. But looking right here, you can obviously see what is happening, okay? And because most people may not be obvious to it, from right over here, we can see where the market took a dip. Sweet, that's very obvious. Over here, we could see where the market stayed stagnant inside this area for a while. It was recovering. Now we could see the market finally broke out of this zone, came up, tapped it, and now it's recovering again. That's just the basic from looking on a monthly time frame, okay? I don't need to draw a million lines on my chart to see it. But let's just say you want to draw something for now and you remove it later on, you can. So this right here we can mark as our previous high, our previous low, and we can verify this is a solid support line, because let's just add a quick way to add the horizontal line in your chart. If you're on a Mac, is Option H. If you're on a computer, not a computer, Windows, I think it's Alt H, not 100% sure, but Option H, and you can add this horizontal line. But looking here, we can verify. Remember, this is the monthly time frame. This has been tapped multiple times, right? Multiple times. It did not break through. It has been tested, stayed in this area for a while. So this is a very valid point, okay? Now, how can we verify this is a very valid point? 2 things. 1, I don't need to verify it's a very valid point. This is the most recent high, and price will test this level again if it is bullish. Not sure if it's going to be bullish yet. I mean, I do know from where it is heading, but I'm talking about as if I'm just looking at the chart. I don't know if it's bullish or bearish yet, but it is very important because it is a previous high. And if it is bullish and the market is headed bullish, then we will see it testing this area. And this is important to note so we can keep it on our chart, okay? But if we come over here, we can see price stayed in this area for a while. And let's just put the line here so you all can physically see it. We can see it tap. Wow, it actually sat here for 2 months. Then we have 1, 2, 3. It wicked in this area and it came back up, because remember, this is a wick, okay? The body closed right here. So it wicked, came back up, closed, and then it finally broke through. So this is an important area. Remember, candles tell you a story, so pay attention to these wicks, okay? Let's take this off. We don't need it. Now, what I'm going to do is go down to the weekly time frame, okay? This is some basic stuff. Everyone should understand what I'm going over. I'm not going to be labeling some advanced terms or whatever the case may be, keeping it real simple for you to understand. Now, on a weekly time frame, everyone should be able to see multiple rejections happening on the left side of our screen. Let's take our rectangle out. There we go. Multiple times this area is being rejected, even from the downside, rejected, came back up, rejected, came up, then we could see the wick came back down again, closed down here where we can see it's bullish, rejected in this area. This area is very important. Is this area a magnetic area? Let's pay attention to two things. So always remember with GBP USD, Gbpjpy, you have some other pairs. I'm not going to list them off right now. Quarter points. Everyone should know the quarters theory. On our free YouTube, we talk about it a lot. We don't mark it on the charts anymore. It's unnecessary, but every quarter point is tested on Gbpjpy. You have 250. Let me just type it out on the screen so persons can know. Should be able to edit in this box, right? Yep. So XXX, I'm not going to have to put the number. Let me just copy it so I get this easy paste. Hey, guys, no thinking funny, not XXX. I know most of you freaks, okay? XXX is just the number. We're putting it there, okay? No nasty thoughts, man. Well, some of you are freaks. So XXX000. Do it again. 250. 500. 750. And it just goes all over again, okay? Repeats all over again. So let's just say 159, 00, 159, 250, 159, 500, 159, 750. Then the next would be 160, 160.250. Everyone should understand this, okay? Now, I'm not gonna draw it on the screen. Everyone should get a clear understanding of that. But what we can see right here from what's going on, we can see where price on our weekly time frame has broken a resistance area, okay? This right here is resistance area that was broken. And how I draw my resistance area now, it has changed up a lot. What I know works better for me to catch more quality entries is I always put it on the wick of the candle that made it a resistance or a support, okay? Now remember, in order for this to be a support, it has to be a bearish and a bullish candle. What confirms this as a support is a closed bullish candle, okay? So if I was to be looking for a quality entry, of course, I'm still going to have this here because this was drawn a monthly time frame and it shows, you know, the important information that we need. I'm actually going to be removing this because I don't need it because it's all the way at 155. Price dips from 164 to 155 tomorrow, and I do not catch at least 200 or 300 pips. If I'm trading this pair, I would call myself stupid. This is not going to happen, but this is not important for me right now. But I'm still going to leave it there until I'm done with this, okay? So right here would be considered a support level for me. Now, price has broken this, my bad, I skipped it. So a bullish candle, closed bullish candle, not if you just see a bullish candle forming, does not make it a support. Because this bullish candle, let's just say all of this information was in there, right? Let's just say you see it going up. Within 15 seconds, this can tank, and that is not a support. This candle needs to be closed to make it a bullish. This right here is resistance because we have a bullish and a bearish candle. This bearish candle, closed bearish candle, let me type this out because most of you ask me the same questions over and over, no matter if I say something. Closed, okay? It needs to be closed. If it is not closed, it is not considered a support or resistance level, okay? Now, I know some of you may try to be some smart asses and say on a 1 minute time frame, it's a closed candle. We are doing a top-down analysis. I'm looking at the weekly time frame. This is a closed bearish candle. This is now considered a resistance area. We can see how this reacted for this week, because remember, it's a weekly time frame. It took a huge dip, right? And a huge dip for a currency pair, obviously, because this is about, we had from 161,300 to, that's about 500 pips, okay? Then we see where it reacted right here and formed a new, this would be our new support level, and it rallied all the way to the upside. Now, what do we want to keep in mind when we're looking here? Remember, on a weekly time frame, this right here is a support area that got broken. 164,750. Okay, cool. So I'm going to leave this here. I'm going to remove this. Don't need that. Also don't need this. And what I want to do is I'm going to go down to my 3-day time frame. You don't have to go down to your 3-day timer if you don't want to, or straight to the daily if you want. But within here, I get to see more data in the weekly way, but divided in half, okay? So this is super important for me. So right here, we can see where it rejected. We have a wick right here. And let's take a look to the left to figure out, okay, why is it possibly rejecting? We have a major support here that was tested. I'm going to draw it to this wick here. We can see right here it was tested, came up and it broke through it. Right now, price is inside this range. So from 163 to 164,341 is our range we're looking at to figure out, okay, where is price going to go? Keep in mind, this is still a resistance area that was broken and that has not been tested again yet, okay? Most times, not every time, most times when a resistance and a support level is broken, it always comes back to test it, even if it comes back 75%, okay? There's some basic stuff I'm telling you all to pay attention to with Gbpjpy. You're going to see this happening all the time. Quarter point levels tapping all the time. Key levels tapping all the time. This is super important to pay attention to. Now, if you are just really tapping into this, make sure you go to our YouTube and just watch where I broke down Gbpjpy completely. But you do want to leave some of the markups on your screen at first, just until your eyes get a bit better for you to be able to spot out different things, okay? Now, next thing is you want to pay attention to on this 3-day time frame is that, I'll just use this. Right here, we have our major resistance level. And this would be considered a key level for us, okay? Now, exactly would be right about here. And we can see where it tested. Let's just put option H. There we go. We can see this key level here got tested multiple times. But like I said, for me, how I notice I get quality TPs to the T, well, one of the ways, not every way, is I always put it on the wick of the candle that confirmed it as a resistance or a support level. Wicks give you a lot of information. This is a higher time frame. So on a 1 hour, 50-minute, 4 hour, we're going to see more information in this area to confirm what was going on, okay? Now, what am I looking at right here? I can see that price is definitely bullish for Gbpjpy. Price is definitely in the area of rejection. And we can see where it started to reject from here, but this can just be a pullback. Remember, everything can't go up forever. So keeping this information in mind, I now go to the daily time frame. Sweet. On a daily time frame, look who we're seeing, a bearish candle forming inside of our zone. If we'd have just jumped to the daily time frame and not broke this down, we'd be like, why is it forming a bearish candle? What's going on, right? But, sorry, my thing is tweaking. But now we can see, and now we can understand that it is inside an area that was rejected and, is, sorry, my throat. We can also see that it's an area that's rejected. It's also inside a magnetic area because the 164, where is it? Right here. Remember what I said earlier is a quarter point, okay, family? Here's the next key point. Anytime a quarter point is breached, let's just say 164 gets smacked, it's bullish, right? It may run up to 164.100, then it pulls back 75% to like 163,800. Then it rides up if it is in a bullish movement. If it is not, if it's bearish, it's going to continue to drop. But pay attention. You're going to see this thing happen all the time. If you're inside our community, you would notice this is how I say, all right, entering again on this pullback. It's because of these same characteristics we've noticed and we've taken note of. Take note of this as well. Now, taking a look right here, we can see it's beginning to pull back. I really don't need to see anything else. I just need to go down to a lower time frame to figure out, okay, why is it pulling back right now? Is it just because it's taking a rest? Is it because, what? But, wow, here we can see where when it broke through, it actually came back and retested this area. But on a higher time frame, you couldn't see where it retested, right? But keep in mind, this right here, 164, oops, let's see if it hit one. Oh, it did hit 50. Perfect. So this right here be considered our resistance area, but it could pull back a little bit more. But in an instance like this, what we can do, everyone's favorite tool is the Fibonacci retracement. And I love it as well. But you wouldn't pull it out right now and draw it here. And the number one reason why, which everyone should know, and I already explained previously, because this candle is not closed. This can continue to run within the next hours and never drop, okay? So what we do is, I don't need this here no more. I already know 169 area is our key level, okay? I don't need to keep that there anymore. Take that off so my chart don't look so choppy. And then now mark off this area. What I also don't need on my screen is this. I already understand within a 163,750 area to about 164,200 is our area of rejection. Let's take that off. We don't need it on our screen, okay? So keeping this in mind, I'm now going to go down to my 6-hour time frame. All this helps me understand these candles better. Candles tell a story. Do not neglect these candles, okay? Cool. Right here, we have minor support that I'm going to draw. I draw it from the body when I'm using the rectangle to the wick of the candle that may get support or resistance. I'm going to go over to my forward time frame now just to see if this candle closes to get some information. Okay, so now we can see it has been playing in this area for a while, okay? This one candle rallied up, came back down, go down to the 1-hour time frame. Like, you don't need to be spending so much time on these time frames trying to figure out what's going on, especially for day trading. Day trading a currency pair, looking for about 50 to, well, it depends on the currency pair, 50 to 100 pips, all right? So looking at this now, okay, sweet. This right here is my zone, okay? What I'm now going to do, now I can pull up my Fibonacci tool from the most relative low, if we're looking for a long position, the most relative low to the most relative high, okay? This right here is the most relative high for me. Now, look where our golden zone lines up on our key level. Wow, what a coincidence, Shady. Is that 2 confluences already you just spotted, apart from the other ones that were noticed? Keep this in mind. Now, just because you see this, and just because you see this key level, doesn't mean you enter this key level. Remember, quarter points family. If the market is tanking, you do want to look, okay, maybe 500 is 250 in this area. No, okay. So what you can do is, we can look for a long position from 5. I'm just going to slap it on the screen and just edit numbers in. And to be honest, keep it a bit. There we go. 163,480. Perfect. Now, you never want to risk more than 30 pips for a currency pair, to be honest. I try to do about 25 pips max. So we can see 25 pips right there. Then what we do want to pay attention to is price may not hit our exact entry level, okay? Our trade ideas are what? An idea. It just helps us to get an idea of where the market is heading. So we need to set alerts. What I do is I set alerts when I see price getting close to my area, so I could just look at the chart. Okay, maybe I could enter here instead of waiting for 500, okay? But sometimes you don't want to be patient. Don't rush your setup. Always trust your analysis. If you're inside a trading group with a mentor, because this is a free call, pay attention to your mentor. Don't listen to no one else on Instagram. Don't listen to me. Don't listen to whoever else. Pay attention to your mentor. Super important, because then you don't want to get a bunch of analysis from different people. It's going to confuse you, and then it's going to cost you to freeze up on entering, right? So what I now do, take a look at 79 pips. Honestly, you can see this doing more. So I go to my 4-hour to try to refine this a bit more. This area is a key level. I'm going to drag this to 750, not 792. Remember, your Fibonacci areas as well can be used as TPs. So this is a 125 pip move for a 25 pip risk. That is a 1-to-5 risk reward ratio. Beautiful. Now, let's go to the 50-minute time frame and refine our entry a bit more, because that was just an idea. Cool. What I do sometimes, what a profitable friend taught me, is you take out your Fibonacci again inside the golden zone. And in the golden zone, in that is when you'd be looking for an entry. And wow, beautiful, beautiful family. And this is why you want to do a top-down analysis, and you don't want to put a million things on your chart because it's going to blind you from seeing what is most important, okay? Now, let's just say for those that like to counter trade. I used to counter trade because now we manage more capital. I try not to do that because you do have to manage your trade a bit more. And I'm going to talk about trade management before the 6 minutes up, but I don't like to trade like that anymore because there's so much accounts we manage, etc. And it's just not worth it for me. I'd rather catch a quality move. But what you can do is, we're just taking a look here. You don't do this and say, JD told you to do this. This is a setup we're looking at, okay? But what you can do is, right here is our support in our 50-minute time frame, okay? Remember, we're following the basic rules. I'm not saying any advanced stuff to confuse you, okay? If we see, where is this price right now? 214? Wow, okay, you know, to be honest, if it drops below 200, you then can begin to say, okay, maybe I can enter in now. But remember, when it hits 164, it may rally a bit down, then it's going to come back up, then it's going to drop, okay? This is the pattern. I know a lot of you see the patterns on most of these YouTube videos and TikTok videos where you see stuff going like this. They don't really break down, okay, why is it going down, whatever the case may be, because every pair is, how do I take this off? Every pair is different, okay? And I just told you the Gbpjpy cycles for that movement. Super important. But what you can do is, once you see it breaks this, it might come back up again a little bit more. So like at 150, you can enter in, and then you could catch like a 50, 75, 66 pip move. You know, just put like 25. No, I wouldn't even put that big of a stop loss. Protect my capital. I'll do like a 15 pip stop loss, and you can take this short, okay? No need. Now, let's take a look at trade management. First thing first, when you all hear me say move your stop loss to break even, move your stop loss and go over break even first. When I say move it to break even, this right here would technically be break even where you enter, but always remember spread, commission, you know, with the broker charges. So if you see, you take a look at MT4, or MT5, or C-Trade, or whatever platform you're using, you're going to see a charge, right? If it says $5, just move it up a little bit, like 5 pips, or, you know, based on whatever lot size you use to cover that charge. Now your trade is on break even. Now, when I say move your stop loss and profit, this right here is your stop loss. The only thing you have to do is go into your platform that you're using and adjust the number for your stop loss and put it in profit. So this is a 1 to 5 trade we're looking at, right? Once it hits 1 to 2, you can move it in profit about 10 pips. This is now 100% risk-free trade. Oh, 15 pips if you want, right? Because 1 to 5, I mean, 1 to 2, that's 50 pips. So 0.15, yeah, that's pretty clean. So what that means is if your trade comes down, you're going to be stopped out with 15 pips of profit, okay? Now, you don't want to do this too much because sometimes you do need to give your trade to breathe. You can see where it rallies up about 1 to 3, comes back down, smacks your stop loss and profit, and then rallies up. You know, a lot of people get pissed for this. Fear of missing out. Don't worry about missing out. The market moves every day. If you're doing a funded challenge, you have 30 days to do the challenge. Guess what? If you don't hit the profit target by 30 days, but your account is in profit, leave it. Get the free reset. You don't need to be these home run traders. Listen, this is a game of consistency. And just like a relationship, you need to be consistent. You need to treat trading like a business. If you don't treat it like a business, you treat it like a hobby, it's going to fuck you in the ass like the government does, okay? So when you are managing your trade, do not be placing trades if you're working a 9 to 5 and you can't use your phone. You're going to lose money. Don't be placing trades if you're in school and you know you can't look at your phone. Don't be placing trades if you're arguing with your spouse and you know you can't look at your phone. Don't be placing trades at the gym because you should be focusing at the gym, to be honest. Unless you're taking a signal, it's okay, cool. But if you're, you know, trading on your own analysis, don't be taking these trades because you can't manage a trade. And if you are, that means you aren't getting a quality workout, okay? I know because I do it. But this is my thoughts right now for Gbpjpy. And as you can see, we didn't do nothing basic. This did not take me no 4 hours to figure this out, but this is a setup I'm looking at. And guess what? If it decides to rally all the way up, or if it decides to go all the way down, it doesn't hurt. Why? Because we're risking 0.5% of our account. Okay, you don't need to be risking 5%, 10%. And this is why I love prop firms, because they show a lot of you aren't disciplined traders. A lot of you are really risking all of your money. And a lot of you come into the markets and putting money you're not comfortable losing and cry about it and bitch about it when you lose your money. So much people hit me up about, oh, they blow their money from signals. They want to take our signals. Like, how could you blow your money from signals? You blow it because you were risking a lot. If you were risking 0.5%, it should take you 200 trades to blow your account. Now, if you hit 100 bad trades from a signal service and you're still inside a signal services, man, only thing I can call you is the big S word, stupid. Because you're stupid. Why are you still taking signals from someone and you had 100 losing trades, okay? So 0.5% max risk always protects your account. And as you can see, this is a 1 to 5 trade. So what that means, if it smacks the 5, we have 1, 2, 3. So you make basically 2.5%. The call is about to end. Hope everyone have a great call. Hope everyone got value from this. If you have any questions, drop it inside the Discord. Probably going to be running more free ones, but for now, it's going to be in our community. Guess what? See you all at the top, not because the bottom is crowded, because all of us deserve to be there. Let's